Welcome to CoinShares The Talk. Happy New Year, everyone. I'm glad to welcome Luke Nolan, Matthew Kimmel, Christopher Bendixen, and Alex Schmidt, and Satish Patel. To begin the year, James Butterfield, our head of research, is away. He will be back next month. Guys, I'm happy to have you all to start the year. We have a lot to discuss. First of all, we have published our own Outlook 2026 recently. It's still available on our website, coinshares.com. Maybe we could discuss that because there's a lot to digest from this Outlook. The end of last year was a bit brutal in terms of price action. Now it seems that we are getting in the green again. What's your thoughts about this beginning of the year? First of all, maybe it's going to be a bit subjective, but what are your forecasts for this year individually? Who wants to start? Matthew, your mic is open. Oh, okay, Chris. Anyway.
Great outlook. Yeah, I got a positive outlook, but I think it'll take us quite some time to get there. I know it's been a good start to the year, but I'm not quite feeling it. So I think we'll end the year doing quite well, but I don't really think that's gonna kick off proper quite yet.
Okay, Matthew, you were about to speak.
Yeah, so I mean we've done a decent amount of work about. I'll talk about Bitcoin, right? Because Bitcoin is the king of our market, right? And everything kind of tends to follow it. I like Chris. I don't think anything is going to happen in a straight line, especially with how headline-driven markets have been in the last year or so, and I don't think that seems likely to stop, especially while the same kind of U.S. administration is at the helm and not afraid to make moves. But when we just look at our internal models on the research team, which I think are like kind of anchor our thoughts without getting kind of emotional about it, and just kind of map our assumptions out and see what the numbers say. Our kind of floor baseline for Bitcoin is to be at about the 140,000 level by the end of the year, and our more upside targets and kind of upper bound of what we imagine to model out is more around like the 240,000. Mm-hmm. So I think as a team, I think we're slanted quite bullish compared to where we are now. And I mean, we do a lot of macro work on the desk, right? James isn't here, but he puts a lot of weight into that sort of thing. But when I take a step back and look at that picture, and that's not where I major, right? But I see deficit spending looks like it's going to continue, right? Entitlements and interests basically make up all of the receipts here in the States. So we're going to need more debt. There's only so many buyers of that debt. The exponential debt growth equals exponential money supply growth. And when you just make it simple like that, I think hard assets win. We're seeing that with gold and silver. And I think in the long term, Bitcoin is the best victor of all these things. It's a better version, right, of gold itself. So I hope that's bullish enough for you all.
So does that mean that you see Bitcoin behaving more like a micro asset than a high beta risk asset this year?
I don't think it's binary one or the other. Okay. Luke turned off his mic, so I'll let him take that question, but I don't think it necessarily has to be A or B.
Yeah. Okay.
Yeah, I think that's a good question. I mean, even internally, we were reviewing some of the traditional finance institutions' outlooks, for example, and a lot of them made reference to the fact, in their view, that Bitcoin is an asset that is purely a risk asset that's, let's say, correlated to tech stocks. And I just think that couldn't really be further from the truth. I think one of the beauties of Bitcoin, the asset, and of the crypto market in general is that the correlations ebb and flow between, let's say, tech stocks and not tech stocks. A good example of that would be this week. where we had quite a large equity sell-off, but Bitcoin was rallying. I think, to answer your question, I think the overarching picture in the longer run is driven by macro factors, and I think Matt made good reference to that. But at the end of the day, Bitcoin is a highly liquid, globally tradable asset 24/7. So obviously, when you get risk on or risk off shocks, let's say on a weekend or even during the weekday, then at times it will behave like a risk asset. I think the 10th of October is the perfect example of that. You had an extremely over-levered market. You had a shock to the market that came after Trump announced those surprise tariffs. We saw this massive deleveraging spiral that broke market structure, and we still haven't sort of fully recovered from that. So that's an example of when it behaved purely like a risk asset. But and then we know that the overarching story is the Fed story. That's been closely linked to Bitcoin price performance over the more medium term. So I think that's what makes it unique in that sense. So I kind of reject the notion that it's one or the other. And it was actually surprising for me to see so many of these large institutions still really push the idea that it's purely correlated to tech stocks. I just reject that notion.
Matthew,
Yeah,
now. Go ahead, Chris.
I just want to chime in and agree wholeheartedly with Luke there. I also just totally reject this like narrative that Bitcoin is somehow like a high beta risk asset. Over any short period of time, Bitcoin's going to correlate to something. This is like the favorite thing that journalists like to do. They reach out to us and they're like, hey, this thing happened, and then Bitcoin did this thing. Like, why? What's the connection? Maybe there is none. If you zoom out long enough, you'll see that all the correlations basically start falling down to 0 over time. So yeah, I almost want to call it a bit lazy, and I don't think that us on the desk think in those terms at all.
In our latest outlook, Matthew, you wrote about the fact that institutional adoption wasn't quite there yet. What's the next real unlock for institutional demand for this year, for 2026?
It's more of the same. It's a boring answer, but it's true, right? So we had major steps forward from a policy and access standpoint in the US, right? Which is just a major economic center globally. And we saw some private market development off the back of that in 2025. And these things just tend to move slower. You have professionals that require time to do diligence, and then you have real consideration among serious committee members of how to make investments. And I think we saw the major wirehouses like Morgan Stanley and Bank of America, and basically open up the doors to what is massive amounts of capital, saying, hey, you can solicit and recommend exposure now. That takes time to play out, right? Vanguard was like the slowest among the major brokerages that serve a lot of retail participants, and they allowed the exposure to the ETFs now, and that was a development late last year. 401ks are being opened up, but you still have the retirement account providers that have to actually implement these changes. So I think it's just a slower burn. What's encouraging is that through things like 13F filings, we can see exposure to the ETFs among financial professionals, right? And you see that growing over time. But it's slow. It's among a small percentage of institutional allocators, right, that are making a small percentage allocation of overall portfolios. But by all means, this is kind of a newer part of the professional investing world, right? And so it's going to take time to build up and get entrenched, but that's also why there's still market opportunity here, right? And why I don't think that Bitcoin has reached a major threshold as far as its market potential goes. it's not saturated. I think there's still a lot of room to run because of that.
I would need a step aside, but speaking of US policy, the Clarity Act has experienced a halt right now, the progression of the Clarity Act. Coinbase has pulled its support for the regulation, and the US Senate is still working on it. First, can one of you could refresh our minds and explain what is the Clarity Act, and then explain what is happening right now in the US regarding this legislation?
Well, I'm in the US, so I'll field this one. It's just serious rulemaking, right, on how crypto markets should work. That's like the simplest viewpoint of it. And, this bill passed the House last summer, right? So we're working on the Senate portion of the Clarity Act, and what is it about, right? So like crypto policy in the U.S. unfortunately has been a bit of letting businesses know what the rules are on the back of enforcement. Right. And so they're trying to change that. And there's real motivation on behalf of both industry and policymakers. And I don't want this delay in markup to hide that fact. But this bill in scope since the House version, now in the Senate, has just grown tremendously as far as, the amendments and the topics that are up for negotiation. And that's really what's caused the stalling. And I'm not talking about one amendment or two amendments. I'm talking more about on the magnitude of like 100 amendments have been tacked on. And so it's not just about the core part of, which agency is going to have which oversight or where disclosure is going to be, reported to among businesses and what types of products and services are allowed. It goes much deeper. And some of the sticking points are about, say stablecoin yield. And then you have bank lobbyists that, kind of have their opinions that want to be included into the bill. There's, ethics about how public officials and can have different investments and business initiatives in the industry. And so while it was kind of the central point, it's like a bowl of ice cream. Now there's all these add-ons, right? And you can't even see the ice cream anymore. It's all melted. So it's kind of fallen through. I don't think that means that there still can't be a law that's passed, a market structure law that's passed this year. There was turbulence with the Genius Act on payment stablecoins last year as well. And when leadership in industry and administration wants to get a deal done, they've kind of proven they can get a deal done. So I don't think it's out the window. That being said, it's a midterm year. And so congressional calendars can get tight, right? And timing can run a bit short. And so the fact that there's a delay, it poses a material risk to there actually being something passed, right? And this is a key piece of policy for the industry at large, probably more for general crypto projects. So outside of Bitcoin, right? Because there's a lot of historical precedent with Bitcoin, and a lot of the sticking points are kind of more about DeFi and stablecoins and tokenization, but it is meaningful to the industry at large.
All right. Before going to on-chain data and altcoins, I would like to remain in the US mostly and talk about equities and companies, maybe for you, Alex and Satish. I think we can assume safely that the wave of crypto IPO will continue this year. We're waiting for Kraken's one. We're waiting for BitGo's one. In Europe, this time Bitpanda has announced a European listing. What are your expectations on this aspect? And do you see the early valuations that we saw last year continue, or should we see more rationale behind these listings?
I can start with this. Yeah, I think 2025 was a very positive, very active year for crypto IPOs. For us in terms of portfolio management, it's all very exciting given that we get more options for investment inclusion and more names to look at. Looking into 2026, I would say, we started the year with quite a lot of uncertainty. And I think a lot of the stuff that we talked about in the beginning of this call when it comes to catalysts and outlook for Bitcoin are going to play out as well when it comes to, whether these deals are going to go through or not, and how much they're going to be valued at. I think the industry has learned a fair bit last year. I think there was some highly mispriced deals that happened in 2025 in both ways, prices too high, prices too low at launch. And I think the industry will be a bit more mature now. Bear in mind that 2025 was the first year that we saw, really big IPOs, after Coinbase, really, after a while. So I think the industry went from a dormant stage. The beginning of 2025, the hype was super high as well. And I think we're not at that stage anymore this year, 2026. I think 2026 is going to be a bit more cautious. I think the world seems to be a more uncertain place. And with that, markets can become a bit, a little bit more reserved, which I don't think there's going to be necessarily I don't think these deals can be shelved. And actually, as regulation, especially in the US, comes forward and these bills pass, especially the Clarity Act, you're gonna see more appetite for these names. You can see actually the Bitcoin price action today. It stopped the rally after it was postponed decision on the Clarity Act. So as there's more certainty in this market, which these bills do bring, that will actually help the IPOs as well.
What is, according to you, and sorry for catching you off guard, but and maybe it's going to be a really personal opinion, but what is the most overlooked and interesting IPO according to you this year?
I mean, for someone who's been in this industry for or with dealing with blockchain equities, one that I really have wanted to see for ages now, and we have talked as well for ages, has been Kraken. I know it's maybe a bit of an obvious answer, but I think when these big names in the industry IPO, it brings so much clarity, again, pun intended, maybe, to us analyzing the industry. We get more peers. We get a true peer to the likes of Coinbase and Bullish. But again, some of these are relatively small or not as pure play crypto as like Coinbase and Kraken. I think would be a proper comparison that we could read across from each other, compare management, compare business, compare volumes, compare fees, and I think that makes this kind of industry and analysis very exciting. And maybe I'm sounding very geeky here, but as opposed to having one peer that dominates the space, and we don't really have anything else to compare with.
Satish, same question. Is there a company that you are looking at closely?
Yeah, I think for me, I think there's two that I'm kind of looking forward to see. First is Stripe, the payment processing company. They've been holding off their IPO for 4 or 5 years now, and at least on the private market, the sentiment seems to be pretty high in terms of what it might look like. But I think that's a broader read on the sort of stablecoin market, especially when it comes to since they're launching or they have their own sort of stablecoin and their own sort of services, how that kind of fare with Circle and PayPal and so on and so forth. So I think if that IPO does well and is oversubscribed, that can sort of bear well for the fintech sort of players. And then second, I'm looking at Securitize. It's a tokenization sort of firm that's got partnerships with BlackRock, SBI Holdings in Japan, etc. And I think if that does well, and it can bring transparency in terms of its financials, that will sort of dictate and show the state of how tokenization is set to sort of take the stage in this year, which we're all sort of bullish about, and we've written a lot about in our sort of outlooks. So yeah, those two are, I guess, are the ones that I'm sort of paying closer attention to in terms of how they're sort of received into the market.
Great examples. So yeah, let's speak about on-chain. Chris, Luke, maybe what does the recent on-chain data tell us about Bitcoin and ETH activity and the recent price action? Have you seen any correlation?
Chris, do you want to start? Or, yeah, Chris, go ahead.
Yeah, I mean, I can just speak for Bitcoin. I mean, activity is not really something that, I mean, if you mean like the magnitude of activity or like transfers or things like that, that's not actually something that I watch that closely. But the on-chain data in terms of Bitcoin right now is actually looking quite solid, I would say, with regards to market structure. It looks as though the very heavy sell side overhang that we've been battling for almost, like 9 months now seems to have largely evaporated. Bitcoin days destroyed, which is a measure of old coins coming to market, is down to, below average levels. And so I think this like risk that we've seen of very old holders going in and like finally getting their yachts and their Swiss chalets and stuff that seems to have at least momentarily paused. Good for them. And so I think this is the type of environment that should allow us to like properly rebalance and kind of grind out a new bottom and find our footing and get ready for what I think is the inevitable upturn again. But I don't see any signs of immediate rocket fuel anywhere. So even if we do take like another small leg up here, I'm very like the bear case needs to be respected as well. And the bear case is we've crossed some very serious technical lines. There are large gaps of unfulfilled trading volume below us, kind of holes in there that are kind of asking to get visited. So I'm not. My shorter term. My shorter term view is turning cautiously bullish again, but I'm still not quite sure that we're out of it yet, and the on-chain data is saying things are looking more stable, but nothing to write home about in terms of happy, great news.
Luke, same question. Have you seen anything interesting on chain for ETH?
Yeah, so I mean, the first caveat I would say for ETH is, because it's a smart contract platform, I would say that on-chain metrics are not as sort of one-to-one useful for price action as they would be for Bitcoin, in my view. But there has been some interesting developments as of late. Earlier this week, we saw the most wallet creations in one day. I think it was around 350,000 wallets, which is encouraging. We saw Ethereum reach the most daily transactions in one day. And that's come sort of shortly after the gas limit was increased in November from 45 million to 60 million. And that was a purely validator-led initiative. So that's also encouraging to see that, validators are the ones that are pushing for that scaling. And then obviously Fusaka kind of ingrained that as a client default as well. So the on-chain metrics are encouraging. It shows that the progress that they've kind of laid out in the last two upgrades has kind of been taken up by the users. We look at other stuff like, let's say, Bitmine have recently staked a lot of their ETH. They're almost staking 1% of the total ETH supply. The entry queue is rising pretty rapidly, but the exit queue is dropping quite rapidly. Interestingly, as well, I think as sort of a consequence of Pectra, not Fusaka, was the validator consolidations. Roughly 12% of validators are now using the new type of validator that can hold up to 2048 ETH. So when you look at the amount of validators, we've actually dropped around 200,000 from 1.1 million to 900,000, but the amount of ETH staked just reached a new all-time high. So for me, that's encouraging. that was one of the main objectives by the developers. Is in the long run, we want ETH to be economically secure, but we don't want to just have an arbitrarily large amount of validators, right? That puts more strain on the network when it comes to, peer-to-peer gossip messages. So what's encouraging to me, and again, the link to the price is tenuous. I don't think it's as clear cut as Bitcoin when we talk about on-chain metrics, but it does speak to, what are the upgrades that the developers have been implementing, and have they been used effectively? Is it making improvements to the network? And I think that is a pretty resounding yes for Pectra and also for Fusaka.
Rightfully, you mentioned briefly Fusaka. So it was a major upgrade for ETH like a few weeks ago. It's been quite overlooked, in my opinion. What does it tell about the network governance, first of all, and what will be the impact of Fusaka? Can you explain that to us?
Yeah, good question. Yeah, so one of the things I'm working on right now is kind of like a 1 month look back on Fusaka. What things have actually materially changed, because some changes change things overnight, but other things it kind of takes a while, and we're seeing a mix of both. But starting with the network governance question, I think it's another example of a successful implementation of something. Different networks choose different ways to implement upgrades. Like, for example, in Solana, you need a supermajority vote from validators, which has its pros and cons. Some might say that could be influenced by larger actors. Some might say that that's the only way to get a sort of democratic way to do things. While on Ethereum, it's like sort of we all agree that this makes sense, and so let's do it, which doesn't come without controversy, but I think there's some pros to that approach as well. When we speak about Fusaka specifically, I believe there was 11 individual EIPs. The most important one, or a couple important ones, first PeerDAS, so data availability sampling. Essentially, a full node was verifying all blob data before this, but now they verify, I believe it's around 1/8 of the data. So it makes that data structure much more efficient, which has allowed them to expand blob capacity quite significantly. So the target amount of blobs per block was 6, and now I believe it's 14, if I'm not mistaken. One of the main concerns that people had was that blobs were pretty much paying nothing at times. They were paying the minimum gas unit, which is 1 way. So they implemented a sort of a price floor to these blobs, which gives it more stability, and counterintuitively has actually made blob transactions cheaper for users because, and bear with me on this, because capacity has expanded quite drastically. You don't get those extreme congestion moments, but at the same time, when there's no congestion, you still have that price floor. So on an aggregate basis, we've kind of raised the bar, but from a user perspective basis, the increased capacity underutilized so far has meant that transaction fees have gone down. There's other changes in the Fusaka upgrade that were maybe more interesting to the people in the weeds and less so to the kind of average end user, but things like blob only parameters. So at the moment, before Fusaka, if you wanted to make change to blob structure, then that had to be passed through in a fork. But essentially, through this EIP now, modifications can be made without having to be implemented in a full upgrade. So that kind of gives them a little bit more tinkering power should they have to. So overall, I'm optimistic. I think, like you said, it's been a little bit overlooked, but that's possibly because I think maybe the average ETH user is not so interested in those technical aspects, but I'm certainly optimistic that they've implemented some good changes that are going to pay benefit sort of when we look out into the future.
All right, thank you for the explanation, Luke. Let's move on to another topic, and we'll keep it brief, promised, but we've seen a resurgence of so-called privacy coins. First of all, Zcash a few weeks ago. More recently, Monero, which is, by the way, the only digital asset private by default. Do you see it as a fad, or do you think this narrative could last this year in 2026? Does someone have an opinion about that?
If I may again, unless
let's go ahead.
I'll try and be brief, but I think last time we spoke about Zcash, and like you rightly said, the Zcash trade just seemed more like a trade because it's not a default private. Obviously, you have to shield the tokens, and I think Chris pointed out a good point, which the actual total supply of Zcash could be infinitely larger than we know of. Monero does certainly fit into the privacy sort of meta. And I think, when you ask, is it a fad? I think privacy is not a fad, definitely. The trade might be a cyclical trade, a momentum trade, but privacy is not a fad. I mean, certainly in light of government actions around the world, privacy is likely to always be something important. And so, yeah, to summarize, I think the trade could be a fad. It's what, $700. It's rallied maybe 120% this month. Yeah. But the concept of a default privacy coin, I think, is not a fad, definitely.
I'm a huge fan of Monero. That is just the truth. I think it's a really cool technology, but does that mean I think it's a great investment? No. I think having private transactions, this goes back to the discussion that we always have in this space, and it's like one of those eternal September thing. Cool utility, something that works and has utility, does not in big letters mean that it is a good investment, that it is going to appreciate like materially over time. It is the quote unquote store of value characteristics that are the overwhelming contributor to appreciation in digital assets over time, which is just straight up why Bitcoin is and will be the major winner forever. But is Monero a great thing? And is there potential for some appreciation there? Definitely, because a lot of people are going to want to have some, because like you all say, it is private by default. It's actually a great little protocol, which is why it's one of the only ones that is not allowed on any exchanges, because it actually works. And the way that it's constructed, look, I am a bit of a fanboy, but I just think it's a really cool thing. Would I store a ton of value in it? Not really. And also, you don't really need to do that, and that is part of the problem. So yeah, I mean, and let's if we can allow ourselves to wax a tiny conspiratorial here, I mean, it is a pretty bad time to be a bad guy right now at a large level in the world. And a lot of those bad people have money that they probably don't want too much oversight
to display
over.
Yeah.
And so Monero playing at least a part in whatever cycle of money movement that they're doing is probably not nothing in all of this. Is that going to be a theme for this year? Yeah, I really think it will be. So I think this could definitely go on, and as a narrative too. You know how it is. Also, a solid narrative brings along speculators and kind of like tourists, and so this could have some legs. I certainly don't think it is at the same risk as Zcash, which has a corporation doing its development for it, and we all just saw the dangers of not being actually super decentralized in any meaningful way, and what that can do to the sentiment. So I don't think Monero suffers from that. I think the people who are contributing to Monero are of the much more ideological and extremely motivated by its function, more so than getting rich. So
yeah,
I
to be
think
fair,
that's
I'm a fervent reader of various Monero subreddits, and I think every user tell to buy Monero and use it right away, not to invest into Monero. So what you're saying makes sense, Chris. Matthew, you wanted to add something?
Well, you kind of just touched on it. I was just going to say financial privacy tends to be more of a spending activity than a savings activity, right? And so is its usage going to occupy a greater amount of the supply base as dormant and lead to a better supply demand equation in the future? Doesn't necessarily square that way. And it's these things aren't companies, right? So like their usage or paying service that someone has, it doesn't necessarily square back into value accrual for the instrument, which is a lot of what I think Chris was harping on there. This isn't a privacy tech company that's licensing out and earning from the usage of that privacy tech and then potentially returning some kind of dividend or cash flow to shareholders. This is a protocol, and it could be used over and over and over and over again, and yet no one actually save in the associated unit, right? And so that's the challenge that I think it's always been up against, right? All the privacy coins in and of itself, and a lot of crypto projects in general are up against that. How do you tie usage back into value accrual for the associated token of the project?
Two last quick questions to end this live stream, and I think everyone can answer. We hadn't had any alt season in 2025, or at least minor ones. Do you think it will happen this year? Do you think there is a structural shift? Should investors rethink how they approach altcoins in 2026? Besides if
I think we had alt season. It's just that not crappy alts, just the good ones. So yeah, that's my take.
Yeah, to add to what Chris said, I mean, we've spoken, I think the story hasn't changed so much from, let's say, the first time we spoke about this probably over a year ago, which is 2021 when we had alt season, you had maybe 150 eligible coins, right? Coins that people knew about. And there was moments in which you could pretty much buy anything. And the speculators were lifting those coins 20-60% a week for a couple of months. And that was alt season as we know it. And that's kind of the hope that I think when people think of alt season, that's what they think of, right? Then we had a complete shift in market dynamics, with the launch of things like Pump Fund and other launch pads that completely dramatically shifted how coins come to market and what speculator behavior became. So people went from, punting these sort of established coins to chasing these 10, 20x on these micro cap, 10K, 100K market cap tokens and moving on to the next through the use and the rise of automated trading bots like Photon, Trojan, etc. on Solana. So that dramatically not only fragmented liquidity, but opened up, a rise of rug pulls and other sort of malicious activity that dispersed liquidity dramatically. And so when you look at, let's say, the top 25, when we've had the alt seasons, and I think this kind of aligns with what Chris said, you saw the more quality alts outperform, the ones that actually maybe had a reason to. Good example might be something like, Hyperliquid. There's a clear value proposition there, some form of fundamental value in the form of buybacks. We saw XRP rally for the reasons like it typically does, regulation, headlines, a very strong user base, etc. Chainlink integrating with private and public companies rallied the price at times. So there were specific narratives or fundamental reasons as to why alts rallied, but we have over 3.5 million tokens now, or probably even more. I checked 2 months ago, it's probably 5 million now. My point being, it's the casino has shifted from the median speculator is just looking for these micro cap gambles, essentially, which completely fragments liquidity. And I don't think we'll see broad-based all season again. I just don't think it's possible.
I don't think it's possible either, because you need too much money. As soon as these market caps start getting to a certain size, you need too much money to move them around. And so it's only going to be quality that can muster that type of effort from enough people. And if you look at it, it went the exact traditional way. Bitcoin, Ethereum, Solana, all in perfect succession. And no, none of them made new highs against Bitcoin. And if you're asking me, I don't think any of them ever will. Will they keep making new highs against the dollar? Yeah, I'm pretty certain that they will. And that train is just going to go on for years and years as the dollar, as Matt explained earlier, just does its completely predictable exponential supply expansion. And so I think we're likely to see this pattern repeat again. So yeah, I think there will be more alt seasons. There's definitely going to be opportunities for people who position themselves well to take momentary, multiples and add to their total coin balance. And skilled traders are going to keep nailing that over and over again. Most people, though, probably
Okay.
not going to be on the winning end of that.
Matthew, you wanted to add something?
Yeah, I'll just say, so we're talking about alt seasons. We're talking about things not Bitcoin. So I just want to make it clear, Bitcoin is kind of in a class of its own, competing on its own level with in other realms. I think what has been clear lately is that modern financial infrastructure is evolving. It's changing. There is disruption there, and that crypto technologies have been long touted, and Bitcoin pioneered a certain set of tools, and it's been iterated upon in many different types of crypto projects and applied in other ways.
Exactly.
Right. Yeah. The crux of that is a part of the story of financial infrastructure kind of modernizing, right? Becoming more global, more 24/7. That is underway. Now, I think that in that disruption, there is the question of who's going to win with that change. Is it going to be, smart contract based platform tokens? Is it going to be these, kind of app business, like pseudo equity type of tokens that are, attached to them that kind of apply some, traditional valuation frameworks to them? Or is it going to just be equities that kind of apply some of the stuff in the modern respect? I think there's not a clear answer. Yeah. Right? And I echo a lot of what Chris and Luke said, and I believe a lot of the same things. We talk about it internally on the desk, but just when you zoom out, it's okay, there's disruption and change, and is it going to actually accrue value to these types of tokens? Because they're being designed in kind of novel ways, and you kind of have to treat them in their own respects with new frameworks, and they're largely experimental, and so we don't know the answer to those questions, and the value may well accrue also just in kind of Alex and Satish's world to equities and startups, and I think over the coming years we're really going to find out.
All right. One last thing, and a little bit of speculation, but I like that. If markets were to disappoint this year, what would be the most likely cause, according to you? Would it be because of, I don't know, micro shocks, the Fed, regulatory missteps? What do you think about that? Chris? Oh, Luke, go ahead.
Probably.
Yeah, go ahead.
If I'm going to throw one out, I'm just going to say if there's I probably think either some armed conflict that gets a little hotter than we want it to, or general market disruption starting in equity markets. I think those are probably the two highest ranking candidates for me.
Yeah, I would agree with that. I think, equity markets on the downside correlation tend to be quite heavy. So if we were to see sort of an AI unwind, I think that would hit crypto. I think on the Fed story, the market's pricing in 2 cuts, Fed dot plot's pricing in 1. The market thinks the Fed's going to be more dovish than it currently anticipates. Could we see inflation be more sticky than than anticipated? Yeah. Could we see the Fed not cut this year? It's possible. I think a lot of people are under the notion that once Jerome Powell is out and, you know, this yes man or whoever it is gets appointed as chair, then that means rates are going to come down. It actually doesn't work that way. It's, at the end of the day, it is 12 people voting. So you still do need like a full tilt. That could happen as well. But I think on the Fed side, you know, a slower moving Fed, which did affect crypto price, especially Q3, Q4, could come into play again, especially as the market is now tilted to the dovish side, even as the Fed has been outspoken about being less dovish than the market anticipates. So that's, I think, a lesser concern compared to the things Chris mentioned, but it's also something that could detract from the crypto story in 2026.
Matthew.
Sorry, can you repeat the question one more time?
Yeah, if the markets were to disappoint this year, what would be the cause, the most likely cause, according to you?
Yeah, I don't have any imaginative new things to add to the story. I think that Luke and Chris explain it well. I think probably just the biggest, simplest thing would be, a recession or some kind of geopolitical tension, right? That could cause a lot of shock and, you know, potentially some kind of like downside liquidity event too. But I think probably and maybe this is just my positive bias long term. It's like on the back of something like that. I think that public officials would step in with major types of, you know, liquidity bazookas, if you will, like they have in the past. You know, not like little types of QE prints, but like big prints, right, to save markets. I feel like one of my like fundamental beliefs is that we're kind of past the point of no return in that respect.
Alex, Satish, you won't escape this from this question as well.
Yeah, I think.
Oh, sorry, go Satish.
I was just going to say that disappointment could be viewed in a different way. So, for example, you could have all of these positive tailwinds come to fruition, like positive regulation, Fed rate cuts, you know, equity valuations going higher, but Bitcoin could still remain at 90,000. I think that would be pretty sort of discouraging for the broader audience and, you know, general market sentiment. So that could be another sort of scenario that could play out.
True. Alex?
Yeah, I think from just a slightly different angle that I look very closely as well. I think one way the markets could disappoint is if we see a rally in the Bitcoin price, but you know, mining economics continue deteriorating with network hash rate continue to grow kind of uncontrollably. Steady rise and no sensitivity to the Bitcoin price or energy prices. I think this sector that has, you know, shrunk quite a lot in 2025 could see an even further downbeat in at least in the public space. Not that these stocks are gonna suffer because they have tilted to AI. But you're going to see the attractiveness of this business model going down. And I think this is a shame for the industry, for investors, because it was a very interesting way of getting exposure to this industry as well.
All right. Thank you for your takes, everyone. I remind that our Outlook is still available on CoinShares.com. Chris, actually, your latest article is also available. It's a really interesting article about the global Bitcoin ownership that you published yesterday. So I suggest everyone to take a read on CoinShares.com as well. And guys, it was great having you. See you in a month, and have a great night. Thank you for your time.
Thanks, Jeremy.
Yeah.
Thank you, everyone.